Good afternoon to our CLA family, friends, colleagues, and community partners. Welcome back to our live stream. Today, we are discussing the recent executive order and memoranda, along with what we are observing from the legislature in Washington, D.C. We're also taking a look at navigating the PPP process through the eyes of a CFO. Our guests today are Omar Nashasibi and Jennifer Witz. As you may remember, Omar is one of our partners with the Franklin Partnership, and Jennifer is one of our chief financial officers in the BizOps practice. Welcome, friends.
Hello.
Thank you for having us.
Thanks for being here. Before we get started, we have an update on the PPP IFR issued August 11th, as well as some housekeeping items. We'll start with housekeeping. We're still monitoring our live stream at claconnect.com inbox, so please feel free to continue to send us your questions and comments. We'll address what we can on the show live today and respond to those things that we don't answer as quickly as we are able. You may also reach out to us at the claconnect.com COVID landing page at the Contact Us button, and we can get in touch with you for some more specific consultation. Now, in recent news, on Tuesday, August 11th, the Small Business Administration issued an IFR allowing appeals of SBA decisions related to forgiveness. Unfortunately, there's not much guidance about the practical application of that process. So as it becomes available, we'll be posting information on our COVID landing page, and we'll address it on the future live streams. On Saturday, the president issued 3 memoranda and an executive order in the absence of agreement on pending legislation. We have Omar here to help talk us through what those mean and what challenges we can expect related to them. He's also going to talk us through the sticking points in the discussions around the next piece of legislation, the factors influencing the timing, and what, if anything, this means for PPP. So welcome, Omar.
Thank you.
Omar, I want to get started by asking you to walk through the order and the memoranda. Can you talk us through what they covered and what they mean in a practical way for people and organizations?
Yeah, absolutely. The President Trump was clearly frustrated by a lack of progress on Capitol Hill, and he's anxious to show that he's taken action against COVID-19 ahead of the election. And so the president issued the executive order and the 3 memoranda that will have varying degrees of impact. So it's important to dig a little deeper into them to understand their lasting impact there. The president does have the authority to waive interest on federally backed student loans and to delay payments through the end of the year, which he did in one of the memoranda that he issued. But the executive order itself only directs the government to consider whether a ban on evictions is needed, and the memoranda on extending unemployment aid and the payroll tax deferral do come with some strings attached. So there's an important difference and distinction between an executive order and what a presidential memorandum is. The executive branch does not have the authority to grant an outright holiday from the payroll tax, but can delay collection of the employee's payroll tax for those that are earning up to $104,000 through the end of the year, as is proposed under this presidential action. Only Congress can mandate a payroll tax holiday. What we are not hearing right now that they are actually looking to include provisions that would include a full holiday for that payroll tax in future bills at that time. Members of Congress at both sides of the aisle, in both the House and the Senate, believe that a permanent holiday of even just this period would jeopardize Social Security. So it's critical to talk to your CLA representative about how to handle this deferral and recognizing that it is not a holiday and not assume that any of these deferments of payments might be canceled. The other memorandum that's causing some confusion is overextending unemployment aid. The president first said on Saturday that the federal government would send an additional $400 out, but then the White House later walked that back a couple of days later. And that's because they're using something called the Stafford Act. And the law that they're using here states that the states are required to contribute at least 25% match, or they cannot receive funding. So effectively, that means if a state does not contribute at least $100 towards the $400 for the extended unemployment insurance, the individual will not receive any additional funds. So that's going to create a real dilemma for a lot of these cash-strapped states with these governors that are already really tight on budget. So we're really unsure of where it is long-term. That'll end up on the $400, but definitely when it comes to the payroll tax, note that, please, this is a deferral. It is not a holiday. And as you've known, don't gamble on Congress to come through in the end to bail everybody out on this one.
Yeah, I think that's really important, Omar. And thank you for the clarification, because I know even just watching the live stream inbox coming into today, we've had so many questions about the practical application of that stuff. So I think that information is helpful and probably will be played back often just so people really get it, get the clarity on it. Now, the next thing about this is we've heard in the news that these are likely to be challenged. Can you tell us what you've heard about whether that will happen and kind of what organizations will lead that charge and what it looks like?
Absolutely. So, not to get politics too much into this, but the politics really is driving the policy and the strategy here. The president believes that he's laying a trap, and wisely so, for congressional Democrats to challenge him on these actions and effectively say, yes, we want to raise taxes on Americans, and no, we don't want to give them the added $400. So that's the trap the president is laying, and Pelosi's been around long enough to know not to step into it. The answer is yes, we do believe there will be legal challenges, but no, we do not believe they'll come from Capitol Hill Democrats. We do believe they'll likely come from outside groups, potentially those that look at it from a minimal government. They don't want to see the executive branch overreach. Many are looking ahead not just to this administration, but to future ones and saying, no, we don't want the executive branch to be moving as aggressively as they have. So we do expect a challenge, but most likely from a right-leaning organization, one of those that look through a minimal government.
Yeah, so definitely it's appropriate to tread carefully and not make any permanent decisions while all this is being challenged. So now that we have that clarity on what's been issued, can we talk about the proposed legislation that seems to be on everybody's mind and some of just the key sticking points that are going to be relevant in this conversation?
Yeah, absolutely. And there are actually a lot of areas where they do have an agreement here in Washington when it comes to the next phase of COVID legislation, but there are some of the high level, high profile areas that they still are definitely light years apart. So the problem we have here is they have dug in both sides on some of those high profile areas. Talks fell apart last Friday, and last night marked the first time that Pelosi had spoken with Mnuchin since last Friday. So that tells you where things are, and that was a simple phone call. The question that the president has right now, and again, not to bring politics back into it, but does the president believe having a large grand bargain is better for his reelection efforts, or is it better to continue blaming Democrats and saying they're not willing to go along and Pelosi is not? And that's a political calculation that we understand is affecting people's lives in real time. But frankly, that's unfortunately the way our political system works. The White House Chief of Staff is holding the line on the total amount of spending to not exceed $2 trillion. So that is one of the big hangups we have right now. Whereas Democrats started at $3.4 trillion, but are looking at doing some maneuvering within the tax codes and timing gimmicks here and there to get it lower. So we're still somewhere we need to close that gap between $1 trillion and 3.4. And that funding pool is another issue. Democrats want a separate spending line item for schools and as they try to reopen. The challenge there is Republicans say no, and the White House agrees that any funding for schools should come out of the state and local allocation. And so those are some of the areas that are holding them up, along with Republicans. They want to see an extension of the eviction moratorium, whereas Democrats want both the moratorium and renters assistance. As you know, on July 26th, that moratorium at the federal level expired. Some states like California are acting, but that's out there. And then lastly, McConnell is insisting on some kind of employer liability protection that's there. But the speaker, along with trial lawyers, they're not going to go along with the proposal as written. In the end, I think there is something there. But that brings us right back full circle to that $600 for unemployment that have expired and what to do about that. Republicans want $450 as an incentive to return to work or to become employed, whereas Democrats are recognizing they have no place to go and be unemployed in certain communities. So they're trying to see where do we end up on that. So there's still a long ways to go. Many of us do believe on the unemployment, we do end up probably at around $400 a week again after all.
Okay, so I mean, Omar, with all these considerations, do you even think there's going to be a new law? And kind of, if so, what do you think the timing will be?
Sure. So let me start backwards with what congressional conventional wisdom is in Washington, and then maybe I'll give you my insights of what I think. But right now, the word is in Washington that no, we're not going to get a bill, certainly not prior to Labor Day, with most not expecting another COVID-19 package to move until we get closer to September 30th, if it does move ahead of the November elections at all. Again, back to my comment on the president. There is a real-time thinking right now within the White House saying, are we better off politically with a massive legislative bargain that might offend our base and not bring them out as much, or do we just kind of go it alone and see what happens? To that point about see what happens, one of my partners recently told me congressional Republicans do want to take a wait and see. They want to see that jobs report that's going to come out, I believe, on Friday, September 4th, and get a sense of what did the August jobs numbers look like before they determine how big the next package could be. So that could be another area where we see some delays. But honestly, we're in a political game of chicken where both sides are trying to see which one can withstand the most political pressure. And I think the longer that members of Congress are back home during this August recess, even doing virtual town halls, they are getting an earful that they need to do their jobs and they need to step up to something. But no, most people in Washington right now believe conventional wisdom is this: we're not going to see a major bill move until after Labor Day, most likely closer to when the federal government runs out of money itself on September 30th. So right now, people are pretty pessimistic. I do think there is still hope for a deal to come through here ahead of Labor Day, partially again to my point about that political pressure, especially coming off conventions. Both sides will meet, but even if we get a deal, say tomorrow, it'll take a minimum of 5 to 7, most likely 10 days to draft the legislation and move it through the process. So if you want to talk about turning the lights back on PPP or on deductibility, those things just aren't going to happen overnight, even if we have a deal in quotes today.
Yeah, well, and it sounds like it's anybody's guess exactly what that's going to look like, but the one thing is that it's not going to happen for at least a few weeks, probably.
That's right.
And it's funny you mentioned PPP because we've been talking about all these things that are the source of so much disagreement. Is PPP one of the controversial areas, or is there agreement on extension if they do get to a bill?
So there's definitely a lot more agreement we have there than in some of the other spaces. And that's in large part because we do have both sides recognizing that PPP was very bipartisan. Most of the CARES Act provisions were when it came to small businesses. And so we do hear that there is a lot of support for it. So no, wouldn't put it in the controversial camp. I do think that there's still some back and forth from what we hear between the Senate Republicans and Democrats, between Rubio and Ben Cardin of Maryland. Cardin wants it to go a little further than currently Rubio does. Rubio's focused quite a bit on long-term lending as well. That's why he created that 7A. But really what we want to look forward to if Congress does move with the next legislation, we do believe, yes, they'll turn the lights back on PPP 1, as we call it, that first tranche. And then they are looking at doing some kind of a second draw. And the question is, what does that second draw look like? It definitely will be more limited in terms of who is eligible for it. We are hearing, as the proposals are out there, capped at 300 employees in that sense, and then the loans being at $2 million. So we are seeing some additional restrictions on what they're looking at on the round two that it comes out. But no, we do believe that if there will be another legislation on COVID, we definitely will get at least turning PPP 1 back on, most likely have a second draw, but the second draw is going to come with a revenue test. And that's what us lobbyists have been working on. We got the revenue test knocked down from 50% to 35% in the Senate GOP proposal, but we still know there's out there. And then lastly, we get this question a lot, and the deductibility of expenses. We know IRS notice, I think it was 2020-32 a few months ago, stated that you cannot deduct your expenses if you have your PPP loan forgiven. Congress is on the opposite side of that, as is most of business. We do want that to be an eligible deductibility expense there. So Congress is supportive of it. But again, we need Congress to move a bill to overturn IRS, because we are hearing from IRS they have still dug in on that. They do not want that overturned. And so we do need Congress to move. And that brings it back over to you all. How do you manage a September 15th deadline and knowing you still have the deductibility of expenses not permitted going into that timeline?
Well, exactly. That's such a big question, and it's coming up, right, with third quarter estimates being due. So, um, I think all that information is super helpful. I know we do have a couple of questions from the inbox that I'd like to bring in, at the end. So if you can stick with us, that would be
Absolutely.
wonderful. I think this discussion really, at this point helps us pivot perfectly to our next guest, Jennifer Witz. Jennifer is a BizOps CFO with CLA, and she has some practical insight into the PPP program from the CFO perspective. So welcome, Jennifer, and thank you for joining us today.
It's good to be here. Thank you.
It's great to have you here. So I think the best place to start this discussion is to ask, are banks accepting PPP forgiveness applications? And if so, is it only for those electing the 8-week covered period at this time?
Yeah, so we are starting to see banks open up their applications through their online platforms. So it is possible that your bank is accepting applications now and you can apply for forgiveness. With the Flex Act, you can now apply at any point between 8 and 24 weeks once you've expended all of your PPP funds. So we're seeing that most applications, though, they are only giving you the option of saying that you are choosing the 8 or the 24 week, which can be confusing if, let's say, you expended all your funds at week 13 and you're wanting to apply then. Which option do you choose? So our advice so far has been to default to the 24 week, but really, you should check with your lender, make it known to them that you are applying, you're selecting the 24 week, but that you are on a 13, 11, whatever the case may be, covered period. And the reason why that's so important is because of all of the tests that are associated with it. So We don't exactly have clarity on whether the wage reduction or the FTE reduction test will extend to the 24 weeks if you do choose a period in between 8 and 24 weeks. So just make that very clear to your lender what it is that you are doing. We hope to get some more clarity within those online platforms and applications so that you can select a different period. We also hope to get clarity on how the reduction test for wages and FTE will be applied if you're choosing something in between 8 and 24 weeks. But at this time, we just don't know what that's going to look like.
Okay, that's really helpful. So the next question, of course, is when does the business have to apply for forgiveness?
Yeah, you must apply for forgiveness within 10 months of the last day of your covered period. So during your covered period and the following 10 months, any loan or interest payments that you are liable for and that you will not receive forgiveness on are deferred until after there is a decision on your forgiveness amount.
Okay. Well, and Jennifer, it seems to me, just from what I've observed, that a lot of people are kind of rushing to apply for forgiveness. Is there any benefit to doing that early or as soon as possible?
Many PPP recipients are anxious to apply for forgiveness, and we're finding that a lot of times it's just out of a desire to get it over with. There's been a lot of anxiety around the entire process, from the sizing of the loan and the application of the loan, getting the funds, and now making sure that we're complying with all the forgiveness rules, and those rules have seemed to change. So there's just a lot of anxiety, and people seem to want to get it over with.
Mhm.
But we really don't know of any benefits of applying early. And what we have seen is some people are so motivated to try to apply early that they're bringing in costs where we're just still not sure if they're going to be forgiven. So an example of that would be rent expense for a related party. Should that be included in the forgiveness calculation or not? We don't have clarity on that. And so if we're trying to push expenses in where we just don't know, in the effort to just try to get it over with, we may actually be risking not getting full forgiveness. So, with the Flex Act was to acknowledge that organizations were not able to spend the funds as quickly as they had hoped. So there's nothing wrong with slowing down, taking your time, making sure that you've got all your documentation in order, that you've actually expended the funds on allowable expenses, and applying a little bit later. That's a perfectly fine approach. Another thing to consider, as Omar was just alluding to, is the tax impacts. So the IRS is still saying that while the forgiven portion of the PPP loan will be taxed as income, they're not allowed for deductions. And so depending on your fiscal year, if you were to apply for forgiveness now and you had that portion forgiven for 2020, you may have a tax impact associated with that. And so it might be a smarter strategy to wait until 2021 and push that tax impact out into the next fiscal year. And of course, we are still waiting for more legislative changes and additional stimulus packages. We don't know exactly what's going to happen. So there is a little bit of risk. If you could apply now and you delay, things could potentially change. And so we do want to make that clear that there is a little bit of risk in doing that. But what we have seen over the past few months is that all of the changes and additional guidance, or I should say the majority of those, have been in the favor of the borrower. So we really feel like that risk is pretty minimal.
Okay. Well, and Jennifer, it seems like some of the banks are taking the forgiveness applications while others aren't. Is there a reason for this?
Yeah, so while the SBA has opened its platform to accept forgiveness applications, lenders each have their own process of receiving and reviewing the information from borrowers. So some banks may still be developing the technology to accept the applications. Others may be using a third-party provider and trying to get that process in place so that they can process all of their large volumes of applications that they're going to need to work through. But again, finally, some banks are waiting as they're backing that push for the automatic forgiveness of loans under $150,000. So this would drastically cut down on administrative time as well as costs for those banks. So they're waiting in some cases for this to pass, if it will pass, to see if it comes to fruition, because that will prevent a lot of that administrative work for them. So it's not uncommon if your bank is not accepting forgiveness applications right now, while others may be. So there's no reason to panic as a borrower. Your bank eventually will. There's no reason to try to rush the process. It'll happen eventually. But those are some of the reasons why we're seeing kind of a staggered approach for banks opening up their forgiveness applications.
Yeah, I think that helps clarify things and makes people feel good. If, it's not like there's something wrong if your bank isn't there yet. It just may not be the right timing for them. So, how does an organization, if I'm a CFO, how do I know if my organization is even ready to apply?
Yeah, I cannot stress enough using a calculator to track all of your weekly expenses, whether they be payroll or some of your other operating expenses that are allowable. The AICPA, they have issued a tracker that you can use. CLA, we've developed our own that we provided to our clients as well. And really, with this tracker, what you do is you enter in all of your allowable expenses as you go. So all of your weekly payroll, all of the bills for utilities, rent, whatever you have that would be allowable. And it allows you to see how you're pacing against forgiveness. One of the other benefits of these trackers is that they actually will then enter in the information in a different version that has all the line information that you'll use in your application. So when you do go to apply, everything's going to be at your fingertips to be able to enter in all of the right financial information for your application. But as you enter this, you're going to see how you're pacing. You can also put projections within the application, or I'm sorry, within the calculator itself, so that you truly do see how you are pacing towards forgiveness. So not only is it a smart thing for you to do, but it's also just going to give, I think, organizations peace of mind, because you're going to have a better idea, as we're all operating in this world of uncertainty, you're going to be able to put a little bit more control back in your court to say, okay, I can see how I'm pacing and I know what my expectations are for when it comes time for me to apply for forgiveness.
Excellent. And that makes a lot of sense. So, kind of speaking of all of that, what would the organization need to have to apply?
Yeah, I know the process sounds like a very daunting process with all of the supporting documentation, but that documentation that they're requesting really isn't that complicated. We'll start with your tracker, so make sure that you have your tracker available and you can share that with your lender. But then for all of your payroll records, you will need your Form 941, and then you also need your payroll summaries from your payroll provider. I will say a lot of the payroll providers have put together PPP forgiveness reports, which are very easy to use, are going to provide all the information that you should need. I do caution you though, because we have noted that, like many of us, we are all still trying to interpret all of the guidance. And so we have found that some of those reports may be a little bit inconsistent with what we would recommend. So just make sure that if you are using a PPP forgiveness report from a payroll provider, that you're comfortable with the information that they're providing. I wouldn't use it blindly, no matter what. Also, in addition to that, you're going to need to have all of the bills, receipts, proof of payment for all of your other operating expenses that are allowable. And then finally, you're going to want to have your bank statement. So you're going to want to actually show that, yes, you've incurred these expenses and you have the documentation for that, but you're going to want to show the movement out of your bank to actually cover those costs. So a lot of firms, including CLA, are helping organizations pull together all this documentation, so your tracker, all the supporting documents, and we can also provide reviews. So if it gives you peace of mind to have a second set of eyes on your package that you're going to be submitting, those services are available.
Yeah, I agree. And it makes a lot of sense. It just to direct people again to that CLA, my connect.com landing page, that COVID, and the emails. There's a lot of information about how to do that and how to get that second set of eyes. And I think it makes a lot of sense. Another question too, from a CFO perspective that I'm curious about is how people should plan for PPP forgiveness in their financial modeling. Can you talk about that?
Sure. So likely you've already received your PP funds or PPP funds at this stage, and you should have already incorporated those into your cash flow modeling. As I mentioned, you should be using a tracker so that you can estimate if you're going to be getting full forgiveness or not. If you're not, then what you'll need to do is think about, well, when is it that you actually are going to apply forgiveness? What portion of the loan will not be forgiven? And then you'll need to start to calculate when you're going to be making those payments to pay that back, and include also the interest. And the interest is the interest that's incurred on the unforgiven portion of the loan, dating all the way back to the beginning of your covered period. So really layering in all those additional payments is a good process.
I agree. And as we're talking about modeling out, talk to me about some of the other things to consider when modeling out future scenarios in today's environment.
Sure. Well, today we're just talking about PPP, but as we know, there are a lot of other options and opportunities for people to take advantage of throughout this COVID situation. So if you've taken an EIDL loan, you'll need to think about your loan repayments for that. If you were deferring the employer payroll taxes, that will actually have a positive impact on your cash flow forecast for this year, but then you'll need to remember to bring those back in and at the end of 2021 and 2022 when those deferrals are then owed back. So lots of different opportunities that are out there. So you'll have to assess your situation, think through all of those, especially the cash impact, and layer those into your financial statements. The other thing that I would mention is just we are obviously, again, operating in such uncertain times. You want to make sure that your modeling is very dynamic so that you can change assumptions as quickly as possible and see what those impacts are going to be. And I really like to think about, again, because we can't rely on history right now. Our businesses have been impacted so significantly. So really think through what your leading indicators are. And often, especially for B2B businesses, this means thinking through your revenue funnel. What are the characteristics of your revenue funnels and how have they changed from your pre-COVID time? So if you're seeing changes in velocity or conversion rates as you work through your revenue funnel, that could indicate a shift in your business. And that's going to be more reliable and better telling of the future state of your business than probably some of the history, just because it's been so sporadic and all over the place. So thinking through those financial modeling aspects in a different way will really help.
Agree. And this is such helpful information, so comprehensive. So thank you for that. We have had a couple of questions come in to the live stream inbox while we've been talking. Jennifer, I'll pass a couple to you, and Omar, I think I've even got one or two for you. So let's start with a question from Brooks, just asking, what is the path to forgiveness for organizations that have not been allowed to open, such as theaters, or reopen, I guess, such as theaters?
So the Flex Act did put in place some safe harbors that eliminates the FTE reduction test for organizations that have not been able to return to the same level of business activity as it was before February 15th, 2020, meaning you're not going to be penalized for not hiring back the same amount of employees because you aren't operating at the same level of capacity. So there is some additional relief that has been brought in, but at the same time, it may mean that organizations in that situation are not able to use all of their PPP funds in the 24-week period. And so we're still waiting to see if there will be any further guidance on any additional relief for these situations. But just know that the FTE test has been relaxed in these situations.
Excellent. I think that's good to know. Omar, I've got one for you. Mark asked, I have a friend. The update.
Thank you. Yeah, a couple things. Sorry, just cut out there for a second, but I think I'm back with you. I think I've got a couple of questions there that we've got. Before I jump to answer your question, if you don't mind, just a quick bit of breaking news here as we get,
Sure.
as you know, sometimes happen with us. Mitch McConnell, the leader of the U.S. Senate, has just announced that the Senate is leaving. So they are not going to be around right now. They've been in session here. Sorry, I just came through from a staffer. They had been in what we call a pro forma session. So McConnell had been keeping people in town just on the offshoot in hopes that they might have some kind of a deal. But no, he said they're officially shutting it down on Thursday today, and they're going to come back here after Labor Day. So you do have some issues there. So that brings us, okay, if they're not going to be able to move here until they get past Labor Day with any legislation, what kind of negotiations, what ends up there? So to that point of the question is, what does the second PPP draw look like, for example? And what we're seeing and what the plan was is to have, as I mentioned, businesses with up to 300 employees participate. And for those that are franchisees, for example, that are classified under NAICS 72 for accommodations and food services, which does include many franchisees, the proposal makes eligible businesses with no more than 300 employees at a single location. So there is some flexibility there for that single location, 300 employees, but you still would need to meet a revenue test for the small business side that the SBA has out there. So, and you also have to keep in mind that as the way it's written right now, everything in second draw for 3P right now mimics everything that's in PPP 1 in that it allows for forgiveness of eligible costs, but they're not currently looking at making those matching grants in any ways. The other question that I think that may have also come up was with regard to the forgiveness automatically of anything under 150,000. We're still getting some pushback on that one, honestly, from a lot of the fraud standpoint. And with every news article that comes out and saying you remember it was all about the Laker effect and Ruth Chris and Shake Shack 2 months ago. Well, now they're looking at it more of the $60,000, the 10,000, the 100,000. It's not so much looking at fraud in the 2 million and up range, frankly. It's who thought that they could just get some quick money, like the New York people that created a company, said it was open longer than February 15th, so on and so forth. So that's why we still have some hesitation in saying that the 150,000 automatic would happen, but definitely Congress is simplifying it to the point where there would need to be a serious flag to where you wouldn't have a problem at that 150 threshold. So we definitely see, if Congress moves with legislation, some added flexibility for forgiveness under that, but I don't know about an automatic forgiveness at this point.
Okay, that's super helpful. And thank you for the breaking news. As always, there's never a dull moment on a live stream.
Yep.
Jennifer, I think we've got time for probably one more question for you. Heather had asked, look, as an owner of the company, I don't participate in W-2 payroll and she takes distributions from the LLC. She was wondering if she could count distributions in the numbers for forgiveness. They included them in the original PPP application for the loan. And now would that make sense to count for purposes of forgiveness?
Yeah, for owners, compensation or distributions can be included in your PPP forgiveness calculations, but the amount depends on the business type and whether you are using 8 weeks or 24-week cover periods. So I would encourage you to look at the most recent FAQ released by the SBA. I think it was on August 4th, because it was very prescriptive on how you would calculate what is eligible for owners. In general, most of the calculations are based on 2.5 months of 2019 compensation or earnings, and they're capped at $15,385 if you're using the 8-week period, or $20,833 if you're using the 24-week period. So there's a lot of additional details about how you should calculate that specifically for your situation. It also covers whether you can or can't include health insurance costs, employer, state and local tax. So again, that guidance gives very good details on exactly what can be included.
Excellent. Thank you so much. Unfortunately, guys, that's all we have time for today. So we'll plan to continue to cover these topics and some payroll tax matters in the next week's live stream. But I tell you, I really want to thank you so much, both of you, for the great information. Todd, thank you so much for the work in the chat and inbox today. And to you in the audience, just for your engagement and your good questions. That really helps move things along and helps us know what you're thinking and what you're wondering about. We'd like to ask you to please continue to send your questions, and we'll cover all we can during our time together. We'd also like to invite you to join us we've got an upcoming webinar series called Unlocking Cash During COVID-19. In that, we'll be talking about opportunities to find tax savings and opportunities to increase cash flow. So please take a look at for more information and register at claconnect.com through our COVID landing page and through that email subscription that we've talked about quite a bit. We really are looking forward to seeing you next Thursday. And until then, we hope you stay safe and healthy. Have a great afternoon.